Hey everybody, Jonathan Lowe here from the 2018 30K Challenge. It's been a little while since I've done a market review. Mainly, I just want to tell you that, March 2nd, 2018, just really hurt me bad. Just really hurt me bad. And I want to review, the trades. I hope you looked at the other video that I posted about the possible trades I wanted to take this day. Because I talked about, the profit windows and Netflix and NVDA and BABA. I also talked about how the SPY was going down, and this is just was a great opportunity to make some money going short using options. And really what happened was that the Tastyworks platform that I was using crashed. I had the orders in, I couldn't get filled, I couldn't cancel. I tried to call them, their line was busy, off the hook, and it just really threw me for a loop. It just really just I missed out on some great opportunities, and only now I am willing to go back and review and to look at it and post a video of what I learned. So I hope this really helps you guys. Anyway, let's go before we go into all that. Let's go into the disclaimers. I'm not a professional advisor. I do not have a degree in finances. Overall, I'm not a profitable trader. This is for educational purposes only. I'm not making investment suggestions, nor should anything you see, read, or listen to constitute or imply any investment advice. Always seek the counsel of your professional financial advisor before making any investments. By reviewing this video, you agree not to hold Jonathan Lowe or any of my assets liable for losses that you encounter while trading the stock market in any form. This is just my theory based upon my own experience. All right, well, with that being said, let's get to first, let's get to the SPY here. What I was looking for at that day. And actually, let's go jump. Come on. Oh, play, jump. Okay, where are we then? Jump. The March 2nd here. Okay, so this is what we know of what happened to the SPY here. Okay, so the SPY, we had that huge correction. This is 11% correction right here. Bounced, almost pretty much right off the daily 200 and just started marching back up. It made a nice recovery. Found support at the 9 EMA. You guys know I like the 9 EMA. I like the technical trading. So look at the SPY finding support at the daily 100 here. It goes up, and we think it's going to go up, and all of a sudden it just turns on us and goes down for 2-3 days here. And so at this point, on March 1st, I'm looking at the SPY. It bounced cleanly off the daily 100. Very cleanly off the daily 100 there. And so maybe it's found its bottom there. Maybe it's going to come back up. So that's a huge level there. Let's see. The yellow was here. Anyway, and let's draw the 50% line too here. There's a 50% line of that. And we'll go to the 5-minute chart of the SPY on that day. And let's see what happened. So as you can see, the SPY initially went up. It tried to roll over. It found too much support below that. And I think it pretty much went up for the rest of the day. Okay. So basically, we had an opportunity, in the beginning. Especially, I was anticipating really the SPY to come up a bit and then fall back short is what I was thinking. If I was going to mark out the rest of my lines, pre-market macro pivot, you guys know I probably marked that one. And my high and low, there would be my low for the day, and the rest of the pre-market, would be way up there like that. So that is what the SPY would look like to me if I was, looking at it to trade. And this daily 100 would be a huge level, and it was a battle through here until the bulls finally won and it started going back up. And as you can see, this pre-market macro pivot does have a lot of price action around it, so that was well respected. And when it finally cleared here, it went up even more, all the way up to the 50% line, which is what I like to draw. And it's a legitimate line. You see it happening, bouncing off of these things all the time. So that's the reason why I draw the 50% line, is because it bounces off of it, or it goes up and tests it. Okay. Anyway, let's go now to some of the other stocks, that I posted about, and some of them were BABA. I already drew all the lines for these, so we're gonna go fast here. You should already know by watching some of my other videos how I draw lines, but we'll go over them really quick here. Let's see here. Let's make this wider here like this. All right, so here's the daily 200, the macro pivot. Here's a daily low, a daily low. This is a pre-market low here. This we'll get into the pre-market macro pivot here on the daily chart. Here's the low of day for that day right there. Here's the 50% mark, which is the difference between this high and this low is 50%. Here's the daily 100. We can adjust that a little bit right there. We didn't mark the 50, so I'll do that right now. I don't think we really need it, but just to show you that how we mark it. And here's the 100, the 9 EMA. I didn't mark the 20, and so yep, that was it. So as you guys know, I wanted to short BABA right at the open. Well, that was one of the ones I was looking at to short, or near the open. As soon as we probably now I'm looking at this, probably somewhere near the pre-market macro pivot. I don't know what happened. We'll have to take a look at the price action right through here. But the pre-market chart, let's go to the 1 minute chart on BABA. We'll go to the same date. And actually, let's go to the 5 minute chart. We'll go over how I found the pre-market macro pivot, which is a very important line for us to mark out. So if you look at it, we close March 1st. Here's pre-market high, which is probably right about there. When we're able to resume trading the next day, it drops down, it comes back up, and it gets short again right through here. So this is what I call my pre-market macro pivot. If you look at it, it's at 179.70 ish, right? But these big stocks, they like whole and half dollars. Okay, so the closest half dollar to here is really going to be what? 179.50, right? You see that right there? And as you can see, we do have a little blip here, a little blip there, but that is a level that we want to mark out. Okay. Let's turn that off for now. Okay, so this is this is the area. This is a good area. This is a significant area in the pre-market chart, and this is the half dollar that is an important mark on these high price names. Half dollars, whole dollars. Anyway, so let's go back to the 1 minute chart. So as you know, in the I was looking to take this short because this thing had big windows to the downside. But overall, we know that the SPY found support the day before at the daily 100. So, we'd have to just, play it by ear and see what happens. So as you can see at the open, this isn't quite right here. Okay, so the pre-market low is actually even lower than this, huh? So pre-market low actually even got as low, wow, actually a lot lower. Let's go back to the 5-minute chart, readjust this. Let's get this right here. So Bob, on the pre-market chart on the second, low was all the way down here already. No, it wasn't. My apologies. Pre-market chart shows the low to be right here and hits it twice. Once, twice right here. Okay. All right. Okay, and then let's go back to the 1-minute chart and go to the open. And before we don't want to take a trade right out of the open. We want to get some type of price action to justify where we're going to take this thing short. And price action remained below the day before, which is good because we wanted to trade it short. We know the pre-market macro pivot here was at 179.70, and as you can see, as it opened up, we have to think how day traders think. We have to think where all the sellers or all the buyers are going to be, and seeing that this is potentially a short day, we want to think about where we're going to get short when the price target that we want to get short at gets hit. So we know this is a significant level. It comes close to it. It rejects off of it, rather quickly. When you see that, you have to see where it rejects right off. And if you look at it, if it's right at the $0.50, it's super significant. If it rejects off the $0.50 and a whole dollar quickly, it's really, really significant. So you have to be ready to act and ready to calculate your risk versus reward. So my thought process would have been to risk, I would love to got in right at 50 cents and risk 20 cents. Anything above here, or would be our stop. Or if you want to go 180, you could risk 50 cents. But it closes, goes up, rejects. Next candle opens up. As it fails, maybe on this next time you want a little retest and maybe doesn't. But as it begins to fail for sure, you have to make a decision. Do I risk here now? It's at 79. Do I risk 50 cents or maybe 70 cents to make, a potential, where is the pre-market? Well, actually, really, the pre-market low is all the way down here now. So your pre-market low, back down to the pre-market low there. So this is what you're looking at. This is going to be bottom. So you're asking yourself, if I enter here and I know my stop is above this line or above this line, what am I risking? I'm risking, maybe 50 to 75 cents to the upside, and to the downside, low days here, low pre-markets here, and if you can break through, maybe get down to 177-ish, or maybe 175-ish. Okay. So you're saying I'm going to risk 70 cents, entering at 179, and I'm going to try to get down to at least here, which is almost 2 points. So that's close to a 4 to 1. If you're risking 50 cents to make $2, that's 4 to 1. So that would be an okay trade. Okay. But you end up getting more, which is 179 179 all the way down to 175. That's 4 points. So it was like an 8 to 1. All right, does that make sense? We did find support through here, and then as the 9 came down, it pushed it through. It came down, retested, the 9 pushed it through again. And then if you look at it, you have a bunch of touches here. And lo and behold, what price are we looking at? Where we have a lot of hits here. 175.50. Pushed through for a couple seconds here, but couldn't hold it. Not enough pressure going down. More buyers, and then it buys. Goes up, and pretty much that's the end of the BABA trade. Okay. Let's look at NVDA, which is probably even a better chart to look at. We'll go back to the second. 3, 2, let's see. Is this on the second? That cannot be the second. The second, 3, 2, 1. Here's 1. So let's review the lines here. The high, the 9, the 20. This is the 50% line, pre-market high. This day low, pre-market low, and then the 50 SMA. Okay, and then here daily 100. So I'm thinking I'm gonna try to get into. I'd love it if the market got really weak, which we know it didn't. I'd love to get into this window here. It would have been awesome. But we know watching the SPY throughout this day, it started going back up, which is the reason why all these other stocks did not enter in these huge profit windows. But there was still great opportunity to make a trade. So let's go to the 1-minute chart here on NVDA. So on NVDA, I don't believe there was a pre-market macro pivot. And if we look at it, there's a pre-market high. Here's the 50%. I'm thinking, a slight, pull up and then a fail. And and look at the spot that it rejected off of. It rejected off of, $230. That's a whole dollar. It's even at $10 increment. So if you want to take a trade, you see the first one, it fails, comes back down, opens here, goes back up to 230, fails again, which is probably when I would have took the trade. I would say, hey, I'm gonna get in here, 40 cent stop. Everything's looking weak over the last couple of days. I want to take this trade down and try to get below this, get below the daily low, as well as below the pre-market low and below the 50, the 50 SMA to get into this huge profit window. This is what we're really looking for. So what are we risking? We're risking 230. We're getting in. You had 2 chances to get in. You don't want to get on here. This comes up, starts coming back down. Yeah, you can enter here for sure. And now you got a 40-cent stop. Okay, and then this candle starts failing through here. You're now, if you enter, let's say we just be conservative. We'll enter at 229.50. You get down to here, you had 228.15. If you're trading options or stocks, you're already up $1 and a point and a half. On real stock, if you're up using options, using the 70 delta, you're already up, about $1, over $1 on your options. So that's a great return. So you can take some profit here. Then, the next minute you get a nice flush down to the pre-market macro, pre-market low. and the 9 minute one catches up, and it flushes hard again, and this time it breaks through. You might take some more at the daily 50, and then it really smashes through, um, and you ended up, being able to get a great trade here. Um, you're risking, you're getting at 229.50, and you could have made all the way down to 221, which is about 8 points in, you know, 1, 2, 3, 4, 5, 6 minutes. Okay, and as it starts coming back up, it breaks through here. Where does it find support? Right at through 223. A big wick here. Starts coming back up. I definitely think about getting out because it's not making a new low. Finding a lot of candles, green candles closing above the 9 EMA. Once it starts getting above VWAP, you're out. You're out and you're done. Maybe I try to trade back low through here again, right? Because you need some consolidation. And this is, it moved 8 points, dropped 8 points. It's got to come back up here. It's probably not going to go all the way up to the high. This would be the next level to take a short in at 228.15. So if you want, it gets up here, begins to get low, starts going red, maybe some new lows, you're already profitable. Maybe say, hey, I'm willing to risk. There's 227.81. It's 225, 228.15. You're looking at a 35 cent stop. If you want, you can wait for it to make a new low on the 1 minute chart, and you can get it at 227.50. So then you're going to risk a little bit more, but you have better confirmation that it's going down. So now you're risking 65 cents off of this level. If you want to use this as your stop, or if you want to use this as your stop, depending upon what it is. And then, you could take profit, down here near VWAP. It comes back up, makes another attempt, a nice doji here, okay, at the 50 cent mark, comes back down, breaks. I don't know if I'd be, taking profit here or adding to my position. But if I would have added, and as this thing came back up, I definitely would have got out through here because it's not working out. It's not working out through here, okay? And if you look through here, this time frame is at what, 1020, 1030-ish. Let's look at the SPY at that time. And this is what you do want to do. You want to compare what you're trading at with the SPY. And at that 1020-ish time frame, which is right through here, you can see the SPY did not make a new low. Here's the low of day, and it tried to push down, and it started coming back up. So this is a higher low here. So this is going to help you just determine that this is not, this is not working in our favor. Not on the NVDA chart, and not on the overall market is making higher lows, and it starts going back up here. So at the same time, NVDA, sort of did the same thing, and that is your clue that it's not working out. No sense in forcing the trade. The 1019, 1020 started going back up. Time to get out. You made great profit, using good risk versus reward. Anyway, I'm getting a little tired myself. I'm not going to go over the Netflix trade. You can look at it yourself, figure it out. Hope this helps you guys. So if you like what you see, hit the like button. I hope that as I consistently go over this over and over again, I'm trying to show you how I use the technical lines, how I always try to use risk versus reward and take at least a 4-to-1 risk versus reward trade before I make a trade. All right, talk to you guys later. Have a good one. Bye-bye.